All right, let's talk about SoFi Technologies. The company just dropped its best quarter ever. Absolutely crushing records and hitting a huge milestone. But if you took a peek at its stock, you'd probably think the sky was falling. So what's the deal? Let's dive into this puzzle. Why is there such a massive gap between SoFi's incredible performance and its stock price? And this is the contradiction at the very heart of it all. Look at this. On one side, you have the company's first ever billion-dollar quarter, an amazing achievement. And on the other, the stock has been absolutely hammered, dropping 28% in just the last month. It's a classic Wall Street head-scratcher for sure. So to really get what's going on, we have to start with the facts. And honestly, the facts from SoFi's latest earnings report are by any measure just incredibly strong. Let's break down exactly how good this quarter was. First up, the big one, the headline number. For the very first time in its history, SoFi's adjusted net revenue crossed $1 billion in a single quarter. That's a massive 37% jump from the same time last year. This isn't just a little bit of growth. This is a major league milestone.
And all that revenue, it's being fueled by a flat-out explosion in users. SoFi added a record 1 million new members in just the fourth quarter. To put that into perspective, their total member base is now sitting at 13.7 million people. That's a 20-fold increase since 2018. Just wild.
But here's the kicker. This isn't just one of those growth-at-all-cost stories. Nope. SoFi posted a GAAP net income of $174 million. This makes it their 9th straight profitable quarter. They are getting bigger and making money, a combo that investors are supposed to love, right?
And SoFi's CEO Anthony Noto is practically radiating confidence. His message to investors was crystal clear. Our strategy is working perfectly. That one-stop shop for all your financial needs isn't just some marketing slogan, it's a real thing, and it's delivering record results. Okay, so stellar numbers, confident management. So what gives? Why the huge disconnect with the stock price? Well, this is where the story gets a lot more complicated. We have to look past those shiny headlines and dig into what's really making the market skeptical.
Turns out, there are a few things that are spooking investors. First, SoFi recently raised some cash by issuing new shares, and that dilutes the value for everyone who already owns the stock. Second, the whole market has kind of been cooling on these high-growth fintech stocks lately. But the biggest question mark, the one that really matters, is that last one. What is SoFi really?
And this is where management draws a line in the sand. Their core argument is that the market is just getting it wrong. They're saying, hey, stop lumping us in with other lenders who live and die by interest rates. That's a fundamental misunderstanding of what we do. They want investors to see them as something much, much more.
And this chart right here, this is their proof. Almost half, a full 44% of SoFi's revenue in Q4 came from fee-based sources. That's a record $443 million that doesn't even rely on their balance sheet or making loans. It's a very deliberate, very strategic shift toward a business model that's more capital light and driven by tech. And this is exactly how they're pulling it off. They're launching innovative products at a crazy pace. They're the first national bank to launch consumer crypto trading, they've got a blockchain-based payment system, and they even have their own stablecoin. This is the evidence they point to when they say, see, we are not just another bank. So we've got these two competing narratives, right? On one side, you have SoFi's record-breaking performance. On the other, the market's deep, nagging skepticism. So where do the pros on Wall Street land on all this? Let's see what they're predicting. Well, to put it simply, Wall Street is completely split. There is no clear consensus here. You've got 9 analysts saying buy, but then an even bigger group of 10 are on the sidelines with a hold rating. They're basically taking a wait-and-see approach. This division just perfectly captures all the uncertainty around the company. And that division gets even clearer when you look at their price targets for the next year. You have the bulls, like Needham and JP Morgan, who see a lot of upside, targeting over $30 a share. But then you have more cautious takes, like Goldman Sachs coming in at $24. That is a huge range of possible outcomes. So how do the bulls justify those higher price targets? What's the math that gets a stock like SoFi all the way up to, say, $32 a share? Let's unpack the long-term valuation model that's propping up that optimistic case. Okay, so here's one model that projects a path to a $32 stock price by 2028, and it really rests on 3 big ifs. First, you have to assume SoFi can keep growing its revenue at a really fast pace, like 23% a year. Second, you have to project that its profitability will keep getting better as it gets bigger. And third, you have to believe that by 2028, investors will be willing to pay 29 times its earnings for the stock. So in a nutshell, the bull case is this. SoFi will eventually prove that it's a technology company disguised as a bank, that its growing, high-margin, fee-based revenue from all those cool, innovative products will force the market to give it the high valuation of a tech stock, not a boring old bank stock.
But then you have the bear case, and it's full of significant risks. What if that amazing growth starts to slow down? What if more competitors jump in? Or what if regulators decide to crack down on their crypto ambitions? Any one of those things could completely derail the tech narrative and keep SoFi trapped with a much lower, much less exciting valuation of a traditional lender.
And that brings us right back to where we started, to that central paradox. So which is it? Is SoFi a revolutionary tech platform that's just getting started, making today's volatility a huge buying opportunity? Or is it a high-flying digital bank whose risks are finally catching up to it? The numbers are amazing, the market is doubtful, and the final verdict? Well, it's still very much up in the air.